everyone, welcome back to my channel. In this video, I'll be discussing a very lucrative topic, which is passive income. One of my favorite ways to generate money on a monthly basis is by investing in stocks that pay out dividends. So in this video, I'll define dividends and high yield returns. I'll delve into the function of how dividends are paid out. I'll then provide a listing of good stocks to invest in. And lastly, I'll display a few examples of an investing game plan that incorporates high yield dividend stocks that you may want to keep in mind in order to generate passive income as well. So at the end of this video, I'll show you how you can put these stocks into a trading plan rotation to guarantee a monthly dividend payout. So first things first, what are dividends? Dividends are the money that is paid to shareholders who have invested in a company. So dividends are typically paid out quarterly, although there are some companies that pay out dividends monthly. With that, there are 7 types of dividends, but cash and stocks are the most common. Now, the reason that companies provide dividends to investors is to incentivize shareholders to reinvest the money back into the company. So they have high hopes that the money that is paid out is cycled back in. Another important aspect to note about dividends is that they are a reflection of the ratio of a shareholder's investment for every dollar amount put in. And this is known as dividend yield. And a good dividend yield on average ranges from 2% to 5%. So let's discuss this in more detail. Now, as mentioned, dividends are generally divided into categories that are either characterized as low, mid, or high yield. So on the screen, you see some very popular companies, and I've placed them under the categories where they're divided in terms of their yield. And of course, that's at the time of filming this video. So for example, on the left side of the screen, we see the low yield. These are going to be stocks that are going to be less than 1%. So for example, Microsoft, Disney, Apple, MasterCard, Facebook, Visa. Again, they're going to offer only less than 1% on your return. In the middle of the screen, we see stocks like Nike, Bank of America, JP Morgan Chase, Pepsi. These are going to provide anywhere between 1% to 2.9% of their return. And then on the right side, we see AT&T, Coca-Cola, Verizon, ExxonMobil. These are going to be considered high yield because they offer at least 3% or higher on their returns. Additionally, on the screen, you see that there are some stocks that have an asterisk next to them. These companies fall under the title of being dividend kings. Therefore, these stocks essentially have withstood the test of time for over 50 years to provide dividend growth. And again, these are going to be stocks that have survived recessions. They've been able to pretty much sustain over economic downturns to provide shareholders with more money each year from their investment. Okay, so now we can take a look at the dividend stock payouts. This is the most important factor that determines an investor's monthly passive income. So you can see I listed some of the companies previously mentioned along with their quarterly payout dates. So for instance, Pepsi. They provide their shareholders with a payout in the months of January, March, June, and September. And they have a dividend yield of 2.96%. And if we take a look at Chevron, which I personally think is a quality investment, they provide a quarterly dividend in the months of March, June, September, and December. They also have a 4.05 dividend yield, which is obviously pretty high relative to the industry. I will say they also have maintained a steady increase in the stock's price over the last 5 years, with minimal drops. So I'll show you that in just a second. Additionally, you see Verizon and AT&T, and I'll also discuss these two stocks in greater detail as I pull up the chart in Thinkorswim. So I'll go ahead and do that now. Okay, so you guys can see the first stock that I want to pull up is going to be Chevron. You see here on the screen. I'm going to go ahead and hit this little drop down arrow next to Chevron, and now you guys can see the market cap, the volume. Again, it's going to show you the open, high, and low. And then I'm going to scroll over once so you guys can see here. Underneath the 52-week low, we see that there is the dividend yield, which is that 4.01% that I just spoke on. So this is going to be essentially what we have for the dividend yield for the stock, okay? Now, for me, it also is going to be important to note the frequency, which I kind of discussed. We know Chevron is going to provide dividends every quarter, so quarterly, every 3 months, essentially. Now, I'm going to go ahead and show you guys the chart. But before I do, you guys see this little arrow in terms of like the little question mark that it has within it. In order to get rid of this, all you would need to do is hit settings. I know it can be annoying. I know some people don't know how to get rid of that. Go ahead and click on enable and disable in-app help. And once you do, you can go back to your chart and now it's gone. So that won't be in your way. Now for me, I trade options on the 2 minute, 1 minute, whatever time frame. But I like to look at anything in terms of investing in dividends on a larger time frame. So I'm going to hit the drop down. And actually, I like to look at it on the yearlies, but over the course of 5 years. So I'm going to pull that up on the chart. And you guys can see here, it's the 5-year weekly chart that I pulled up. So we see that Chevron back in 2020 was at a low of $51.60. If you look at the high, it's going to be in 2022 towards the end. It was at 189.68. Now, why is this important? Because we see when you look at the charts over a course of time, like 5 years, you'll see if the stock is either performing or underperforming. So it's important to know exactly what the stock is doing in terms of the motion and which direction it's headed in so that you know if that particular stock is going to be a good investment for you. Now, again, this yield is pretty high, so I really do like investing in Chevron. It does offer a great amount of returns for dividends, so that's great. So let me go ahead and pull up a couple other companies so you guys can see how they are performing as well. So let's do Procter & Gamble. Perfect. Okay, so with Procter & Gamble, kind of the same thing. You see incremental growth over the last 5 years. We see the low was $94. It's now up to close, at least to its high for the particular stock. So it's currently at 167, and you guys can see here the high for the stock was 168.34, and that's actually current. So it's performing at an all-time high. It set a new high for its this particular performance of the stock, which is a good thing, right? So we also see the yield for that dividend is sitting at 2.40. And then, of course, we see the frequency like I discussed. That's going to be right in the middle. That's going to tell us every quarter. Now, within this, we see that there's been some dips, highs and lows. With every stock, is going to be those kind of things where it's bilateral. It may see a drastic dip or it may see a drastic rise. Totally fine. It depends on your trading plan, on what you feel comfortable with. Okay, so let's go ahead and take a look at the two stocks that I showed you guys in terms of AT&T and Verizon. I want to talk about those in greater detail. So let's look at AT&T. Put the ticker symbol in. Now, AT&T does offer, like I said, a very high yield dividend return at 6.38%. You guys can see that. However, the stock has not been performing very well over the last 5 years, as you guys can see here. Now, the high is $29.98 back in 2020 or the end of 2019. And then, of course, now we see the low is going to be at $13.43. So the stock hasn't ever really reached a high amount in terms of the value, being well over like $40, $50. It hasn't done that in the last 5 years. So it may not be a huge concern for some people just because the value of the stock isn't very high just to begin with. So that may not be concerning. But for some, it may, because the stock has not grown. This company has not shown growth incrementally over the last 5 years. So that's something to keep in mind. Also, same thing with Verizon. Let me pull that up as well. Verizon, there. Same thing. You guys can see here. The dividend yield is very high at that 6.64%. So that's a great thing in terms of receiving those monthly payouts. However, again, the stock has not seen much growth over the last 5 years. So it's important to note whether or not you would want to invest in a company that has made some pretty much bearish plays all of the last 5 years. It's not necessarily either going to be positive or negative, depending on what you feel is necessary for your trading plan, if you don't think that these factors tie into a value for your investment. So it just depends on what you think, honestly. So again, I like to always take a look at what you see for the 5 years. Just because the dividend yield is high doesn't always mean the stock is doing great. So just keep that in mind. I just wanted to provide that example because a misconception can often be, oh, okay, the dividend yield is really high. This must be a great company to invest in. Well, if you look at the charts, it kind of may or may not display that as true. And we can see that here with Verizon and with AT&T. Okay, so definitely keep those things in mind. I think that's pretty much covering everything for this. So let me jump into the last segment of this video so you guys can kind of get a trading plan, game plan pretty much established for whatever you want for your investment strategy. So the very last thing I want to provide in this video is a few examples of an investing game plan to solidify monthly passive income. Again, this is one of the easiest forms of a way to make money. On the screen, you see 4 examples of stocks you can invest in and the months in which they pay out dividends. Now, if you're new to investing, it's important to dollar cost average your way into purchasing shares because this can allow you to build your account gradually. So, with the first example, if you were to invest in just 4 companies, Pepsi, JP Morgan, Procter & Gamble, and Coca-Cola, this is a breakdown of the months in which you would receive those dividend payments. Example 2 provides a little more variety to diversify with stocks like Best Buy and ExxonMobil. Example 3 incorporates AT&T and Nike stocks. And lastly, example 4 provides a list of just 1 stock per month. So this plan is definitely beginner friendly. So feel free to take a screenshot so that you can keep track of these stocks or to keep them in mind for future reference. With that, just remember, your trading plan can always evolve over time. So if you feel the need to adjust your position or respective investment in a company, take the time to reevaluate and strategize for what makes the most sense for you so that your investment goals meet your time horizon. So that'll do it for this video. If you found this information helpful, feel free to leave a comment down below. Thank you so much for watching, and I'll see you in my next one.